The bear market for cryptocurrencies has started. Price decreases have harmed practically everyone. Robert Kiyosaki, a gold bug and real estate billionaire, predicted Bitcoin will drop to $1,100 per coin before turning around. This version of a crypto winter won't be like previous ones. The crypto market has never faced a worldwide depression despite the greatest inflation in 40 years and climbing. Once booming cryptocurrency enterprises have gone bankrupt, and investors have sold out of fear this year. The upheaval has already cost trillions in market value, billions in frozen assets, and thousands of people have already lost jobs in the industry. But the present losses may be only the beginning. Early adopters who have gone through prior bear markets are more confident than ever. Their entire financial future depends on Bitcoin's success as if it originated from a higher power and can't fail. People assume if they fix the money, everything else will follow. This is proof why taking an orange pill by itself has proven to be a powerful drug. All rational and critical thinking goes out the window. Isn't our government the most corrupt entity on the planet? Wall Street bankers have infiltrated the government and implanted their own inside the Treasury and Fed. Those who mistrusted and devalued fiat money are still in command. They're talking about regulating the digital asset market, which is code for take over the industry, sell financialized crypto products to non-accredited investors, and tax them. Instead of wondering when the bear market will finish, consider where the sector will go if the Federal Reserve's determination to boost interest rates to slow inflation backfires. What if the Fed doesn't change? What if a crypto black swan occurs next year? We're not discussing money issues by mistake. The economists predicted this in 1988, and here we are. Coincidence? I don't think so. Here are 5 things to consider before the official crypto winter begins, but not all. Anything is conceivable in the crypto Wild West, particularly with computer code. Number 1. What if the Ethereum merging fails or the code is broken? Proof of stake is outshining proof of work as the preferred consensus algorithm because it suits the globalist energy agenda better. After a recent merge experiment on the public test network Sepolia, the formal changeover is closer than ever. Unfortunately, 25 to 30% of validators were down following the merge due to configuration errors. The Ethereum merge might determine the future of digital assets. If it fails before or after proof of stake, the cryptocurrency market cap will free fall. I suppose regulating authorities are waiting for the final United States acceptance and formal digital asset regulatory framework to see how Ethereum consensus change proceeds. Jamie Dimon Hands and JP Morgan were early investors in Ethereum, and their participation in creating the Enterprise Ethereum Alliance is important for the future of finance and banking. Imagine what would happen to ERC20 tokens and smart contracts, and how faith in open source networks would fall. Number 2. What if a protracted bear market delays the spot Bitcoin ETF? People have maintained for years that a U.S. spot Bitcoin ETF might revive crypto. Since the Securities and Exchange Commission rejected the Winklevoss twins' initial BTC ETF proposal in 2017, every physically backed Bitcoin ETF proposal has been rejected. Let's not forget that Wall Street always profits from the market no matter what. The first U.S. Bitcoin futures ETF was pro-shares. It came out amid Bitcoin's all-time high last year. Banksters may profit from a Bitcoin bull market without owning coins with this deal. The same corporation developed the first short Bitcoin ETF to benefit from the coming calamity. Wall Street never wastes an opportunity to profit from a deal. Number 3. What if the Fed remains unchanged? What if quantitative tightening aims to bring down the global economy? Don't fight the Fed refers to one of the world's most well-known powerful financial powers. After years of loose money and near zero rates, the Fed hiked interest rates by 0.25%. Rates hadn't been hiked in over 3 years. Since then, the Fed hiked rates by half a point and then 3/4 of a point, bringing the benchmark rate to 1.5 to 1.75%. Globally, hazardous asset prices have fallen. Bitcoin fell from $48,000 at the end of March to its current price at $20,000 support. Bitcoin will hit $1 million before 2030 in my opinion. At that moment, pricing anything in dollars will be a mistake since the Federal Reserve note will no longer be the worldwide benchmark or a need in settling a trade. My The Dollarization series over the previous 8 years explains why. The Fed's cheap money policies affect cryptocurrency and conventional market pricing. Without QE, no moonshot. If these rules don't return, typical investors who are currently tapped out won't invest in crypto anytime soon. No favorable regulatory clarity, no institutional funds. Just that simple. Number 4. What if Wall Street or the Bank of International Settlement and the oligarchy families are behind the stablecoin crisis. How long have digital asset investors discussed Tether and other pegged fiat coins? Stablecoins have served as a primary means for central banks to test their final versions in central bank digital currencies. Maximalists believe they can avoid fiat without fixing the core issue we confront: a governance crisis. You can change the money, but if you don't address the government corruption and criminality, you just end up with the same mindset and philosophy under a new system. The Federal Reserve and global governments aren't fighting against distributed surveillance technology, since it acts as a real-world testnet for the Fedcoin and other central bank digital currencies. It's a ledger, but it's a private ledger administered by the same group that presumably had their hand in creating Bitcoin. This video you're watching isn't random. Everyone in crypto is talking about a bear market and how it impacts their financial future right now. We were told well before heading into this decade that fiat currency would be in flames due to inflation. We don't trust stablecoin makers or the underlying currencies. This wasn't random. The Federal Reserve is working on a solution for Tether, Terra Luna, and other unstable currencies. Vice Chair of the Federal Reserve Lael Brainard stated stablecoins are a risk spillover. The top two stablecoins account for 80% of market valuation. She termed them crypto fiat bridges. She stated fiat-backed stablecoins are bank-run prone. Number 5. What happens if blockchains have flaws? 102 decentralized finance projects had exploits totaling $3.4 billion so far. Those were just careless human errors. I'm talking about systemically critical AI and machine learning vulnerabilities. AI implies computers can think like humans and execute real-world activities. Machine learning refers to technologies and techniques that help systems detect patterns, make choices, and improve over time. Do you think the government's secret initiatives, like Area 51, don't have tech waiting for the right time? The Penn Commission analysis revealed that most blockchains aren't decentralized, are attackable, and employ obsolete software. That's the same government initiative that created SHA-256, the Cryptocurrency Markets Foundation. DARPA funded this article's research under DOFA 875012293. The United States government allowed copying and sharing of the tech. So the same government that converted the dollar into a weapon and is now utilizing the same technology to establish a central bank digital currency produced and released this encryption protocol for fun. Surely they can disrupt and backdoor the Genesis protocol to ensure universal interoperable fiat domination by 2030. Here's a refresher. Why do we keep rebranding currency anyway? It's because of the current debt Ponzi scheme collaboration between governments and central banks. I hope you're following me at this point. The Fed wants inflation, hence the global market falling. How else could they market digital money and persuade the world to adopt it? These were 5 of the top concerns crypto fundamentalists chose to ignore. I'll save more of this rant for a future video. If you're interested in more right now, you can download the RTD report Mega Crypto Crash for further research. Definitely worth an extra 5 to 10 minutes of more in-depth analysis. The link is in the description below. Now we just have to wait and see how this upcoming crypto winter plays out. Please comment below. Be friendly, but honest. Help me spread this video so more people can discuss cryptocurrency's fundamental challenges, not simply optimism and hype to fill the big guys' bags. Take a minute to subscribe and click the bell. Hopefully, the algorithms do their job and inform you of the next video upload or live stream.